Hello everyone, today we're going to be talking about time cycles and how you can utilize them in your trading to get an unmatched level of precision in the marketplace. First thing you need to understand is that market swings are not random and the time they happen is not random. And you might be like, Nautilus, but we've been taught market swings are completely random and you can't time swing points and where highs and lows are going to be formed. Well, I'm here today to try and prove you wrong. So firstly, HYPOTHETICAL, the interbank price delivery algorithm, delivers price efficiently. This is super important to understand. This means price should be booked at a certain level at the correct time. Once you understand this, you'll see the markets completely differently. HYPOTHETICAL refers back to time-based liquidity pools, and these liquidity pools are used as reference points later on and in future time cycles, and they can be used as your POI or draws on liquidity later on in time. So, let's look at the AM session through the lens of 90-minute cycles. The first cycle starts at 7 and ends at 8:30. Second one starts at 8:30, ends at 10, and third one starts at 10 and ends at 11:30. The purpose of the first cycle is to accumulate liquidity on both sides of the market for then the second time cycle, which is our manipulation phase, to sweep one side. So then our third cycle, our 10:30 to 11:30, to distribute the opposite way and target our second time cycle's low or high and our first time cycle's low or high. This is really important to understand. The point of our second time cycle is to manipulate price to get retail minded traders into the market and in the wrong way. For example, if we're in our first time cycle and we're consolidating and then we get to 8:30 and we run up higher, or at 9:30, which is time the market opens, runs up higher, then we can expect 10 to drop down and distribute down to the second time cycle's low or the first time cycle's low. Now let's have a look at what a high probability setup contains. As you can see here, NQ has been consolidating, then we manipulate down under all of these orders and all this liquidity that has been formed underneath here. We manipulate down and we distribute back up, market drops down and into a low risk buy in our market maker model. What is a low risk buy? It is the first point of accumulation in a market maker model. So it could drop down into the breaker block or a fair value gap that has been made in this first distribution phase. After market drops down, this is our intermediate term low now because it's made inside of this imbalance. Market runs up one more time, taking our previous cycle's high, and SMT is formed at the highs. As you can see here, ES has dropped down into the inefficiency and came up but failed to do the same as NQ and hasn't took out previous cycle's high. This is our first warning sign that manipulation is taking place in the marketplace and we could be expecting low prices. After we get signs of a high is forming, we should be expecting distribution back down to the downside and below this intermediate term low. If we displace underneath this intermediate term low, we can be expecting a retracement back into this intermediate term low, which has now been formed into a breaker. This is now a low risk buy for this side of the curve. Now, what do we target? Simple. We target our previous cycle's low. Now we move our take profit down to this low here, which is our previous cycle's low, and it should be hit in our next time cycle, which is our distribution phase. You will now watch a trade execution that I executed yesterday just on these concepts.
Keeping it G ain't nothing. You ain't gotta like it cause the hood don't love it. You ain't gotta like it cause the hood don't love it. Watch a young nigga show his ass, I'm puppy. I got the whole block bumping. You ain't gotta like it cause the hood don't love it. You ain't gotta like it cause the hood don't love it. Watch a young nigga show his ass, I'm pumpy. Nah, you know what this is. Tell them this a celebration, bitch, yes. Where the barbecue pits and the mini bikes, mini skirts in the seas and the Miller Lights, domino tables, who got big six? Where I'm from, we do concrete backflips, flip flop, back through the ghettos where I bring hip hop back. Real niggas love me, they tell me keep it pushing. The only niggas speak for Wayside of Central.
I hope you guys enjoyed that execution, but now I want you to pause the video and investigate this price action. This is my entry on this candle here. On the left is our NQ chart, on the right is our ES chart. I want to investigate what made this a very high probability setup and why I entered. I just want to say, if you really did pause the video, you should give yourself a pat on the back, because not many people pause the video and actually investigate the price action I'm showing them right in front of their eyes. If you do not pause the video, you are only selling yourself, and you will not be able to see this real time in the marketplace. So now I'll add some lipstick onto the chart and see what was going through my head as price is printing live. So as we can see here, we are accumulating in a very tight range. These two 30-minute cycles were only used for accumulation. Now, as soon as we see the hour open, we immediately drop down below this low and sweep liquidity from under this low. We then move up and above our previous 90-minute cycles high. However, if you investigated the last image, you would see that ES failed to take out this high. This is SMT on our cycles high, which is a very strong warning sign that we need to start becoming cautious and that the market could start rolling over. And as we can see, we displace down back under this one very specific candle, which is the candle that made the cycle high. If we were to see continuation above the cycle's high, we would need to see this candle act as support on price. But as you can see, after this one big candle, I now wanted to see this candle act as resistance on price, and we shouldn't break back above this candle. As soon as I saw this wick form and us close back into this range that we're trading in, this one range, I knew that we should keep going lower. Now I've got a question on my execution, how I knew that this high would be safe to put my stop above. Simple. If you look at the ES chart, ES was making higher highs above this one high. Again, this is SMT above the marketplace, and this is now protected high. This high should not be taken out. But you could also be saying, Nautilus, how do you know if it's going to expand if this is all just chop? This is not chop, this is time distortion waiting for our macro time. As you can see here at the bottom of the screen, this orange box is our macro window. As soon as 7:45 hits, which is on this candle here, this is the 7:45 candle, we can see immediate distribution down. All of this is time distortion waiting for a macro window. As we displace down, we create this breakaway gap, which is a sign that market wants to violently displace down and it doesn't have time to rebalance any of this gap. Now, I want to draw your attention to this one very specific green candle right here. This candle was made at 7:48. If we go back into our previous cycle, this very specific green candle was made at 6:48. I will not be explaining this any further in this lecture, but if you want to find out more about this, my last lecture is explaining this. Two more things to note. This is our previous 30-minute cycles low. This is the candle that created it. If we draw out this candle, as you can see, it perfectly aligns up with this SIBI that was made during us distributing back down. The reason I knew that this is going to be a breakaway gap is this candle should not be displaced above if we wanted to see lower prices. This is why I was only expecting a very shallow retracement into here and continuation back down. Now notice what I was using as my drawn liquidity. Our previous 90-minute cycle low was used as my first target. Why is this? Because we took out our previous cycle high. The first thing that we target is our previous cycle low. Now this sell side is the cycle before this one. It's that cycle's respective low. After we swept this, I want to see continuation down and use this as resistance and price. However, we failed to see that and we carried distributing up. My stop was trailed above this high and I got stopped out on this long wick here. I did not want to see this high broken as I had PD array SMT and it was our intermediate term high. Now, I think that'll do it for today. If you have any questions, feel free to drop them down in the comments and I'll try my best to answer them. I'm also thinking of doing more breakdowns just like this. If you want to see that, drop a like and comment if you want to see more of these. I hope everyone has a good rest of their day, and goodbye.